All the content on this channel is for education or entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research. So in today's video, we have some important news. YieldMax have just announced they are doing reverse splits on some of their ETFs. They have just filed the SEC filings, which have been confirmed for reverse splits. So if you own any YieldMax ETFs, this may be the video for you. So there is 12 ETFs that are being affected. 7 are doing 1 to 10 splits and another 5 are doing 1 to 5 splits. This will affect the share price of these ETFs, but it is not all bad and it is not all good. So I'm going to do a little deep dive into what this means for your investments and your distributions. And just a little spoiler alert, one of these ETFs has already had a reverse split, and I'm guessing you know which one I'm talking about. So to start with, the 1 to 10 splits are going to be ULTY, which is the ultra option income, and this is inevitable. This was always going to do a reverse split at some point, just because of past experience, seeing what other ETFs have done already. The distributions are just wild. 85% annualized income. And if you think that's not going to do a reverse split at some point, then you must be kidding yourself. Next up, we have CRSH, which is the short TSLY option income. And then we have DIPS, which is the short NVIDIA options income. Then we have FIAT, which is the short coin options income. So it seems like a lot of these short ETFs actually pay really high distributions. We're seeing upwards of 100%. So for me, this is why they're going to have to do reverse splits. So next up we have MRNY options income ETF. Then we have AIYY, and then we have CONY, which is the Coinbase options income ETF. A lot of these have got very low numbers, which come into problems with institutions and liquidity issues further down the line, and it is not very nice looking at an investment that is $1 versus $50, for example. So the 1 to 5 reverse splits are YBIT, which is the Bitcoin options income ETF. Then we have TSLY, which is the TSLY options income ETF. TSLY has already had a reverse split, so this will be the second time doing a reverse split. If you was there when TSLY did the first reverse split, drop it in the comments below, let me know. I would really love to hear your opinions on a reverse split on TSLY again. XYZY, which is the block options income ETF, XYZ. ABYY, which is the Airbnb options income ETF, and then we have OARK, which is the ARK Innovation options income ETF. What is your opinion on reverse splits? Let me know below. So what exactly is a reverse split? A reverse split consolidates your shares into fewer shares at a higher price. And a quick example of this will be the 1 to 10 split. Before, you have 1,000 shares at $5 equals $5,000. After, you will have 100 shares at $50, but that will still equal $5,000. Your total value of your investment does not change whatsoever. Moving forward, all my portfolio reviews will now be on Patreon. This is where I'm going to share my full breakdown, and you also unlock the full catalogue since the beginning of the portfolio reviews. Inside, I will share high value content for the community and all my spreadsheets, such as the net worth tracker, and you will get to see certain strategies that I use, such as the 75-25% strategy. So if you want to support the channel, the link is down below, and I'll see you inside. In the past, I've had quite a lot of questions asking how I actually keep track of all my payouts, my dividends, and my portfolio snowballing each month. I use Snowball Analytics. It pulls everything into one dashboard so I can instantly see my cash flow strategy is really working. If you want to try this for yourself, I've got 10% off for you. Just use my code CashflowKing below. Links in the description. So a couple of examples right here. So before the split, the share price is $8. You own 1,250 shares. The portfolio value is $10,000. The monthly distribution is 40 cents per share at $500 monthly. After the split, your share price may be $40. Shares owned are 250 shares. The portfolio value is still exactly the same at $10,000. Though your monthly distributions will go up per share to $2, but the same amount is the monthly payment at $500. It's just increasing the share price alone. It's the same value, it's the same income, but it's just different numbers. So here are a couple facts about reverse splits. YieldMax have done this before on TSLY. This will be the second reverse split for TSLY. It is very common in high yield cover call ETFs for reverse splits to happen. Many funds will adjust the share prices to make it look better for investors. So for example, if I were looking at a fund and it was $2 versus $50 and the exact same metrics for that fund, I would always pick the $50 one because it's got more room to move. The historical outcome: most high yield ETFs continue distribution strategies unchanged after splits. So if you're in this fund for income only, the reverse split does not really matter that much, if I'm being honest. Your income will still be the same, your portfolio value will still be the same, except the share price would have moved up. And that is the be all and end all. The reverse splits in cover call ETF does not make that much of a difference. But then again, it does not fix NAV decay. It is cosmetic. Share price dynamics will continue. So if your ETF does have NAV decay or NAV erosion, let's say, you will still erode down as normal. So why are YieldMax doing this? Share prices got too low due to NAV decay from high distributions. I think some of these share prices are very low, what we've been looking at. I think, especially on the short ones, on the like AIYY, I think some of these are in the couple of dollars range. So this will be why they want to do reverse splits for a start. Better market perception, higher share price looks more institutional. So institutional requirements will be a minimum price for some of these ETFs. So institutions may need to see $5. There is also minimum requirements for margin as well on some brokers. So that is also a big issue in the US. So they like to see some of these share prices above $5 for a start. The higher the better. That's why the start I'm at, for example, Rickshare started at $25. And then I think YieldMax have even started them at $40, $50 for the new ones. So here are a couple metrics that you can put together. So what actually stays the same after the reverse split? Your total investment value will stay the same. Your dollars distributions will stay the same. Your yield will still the same, and the underlying strategy will all stay the same. Now what is going to change? The number of shares that you actually own will change. The price per share will be higher. The distributions per share will be higher, but the actual monthly amount of your distribution will stay the same, even though you have a distribution per share which is higher. And it is all visual perception. It looks better to the end investor, to the institutions, for the margin requirements, for a higher share price, and this is why they do reverse splits. Liquidity can also be an issue, but when they have a lot in the fund, liquidity doesn't really matter too much. It depends on what kind of fund manager we're talking about. With these being YieldMax, I don't think liquidity is going to be an issue whatsoever with the lower share prices, but everything I've just stated above will be an issue. So this is a cosmetic change, not a fundamental one. If you're holding for monthly income, I don't think this changes anything about the products, about how you should go against your strategy. The distributions will continue to be the same. Your strategy will stay the same. Reverse splits just makes the share price a little prettier. But also, that being said, I don't think reverse splits are very good in my eyes, because these are not the kind of funds that I want to invest in, that reverse split, because if they have to reverse split, it means they have a lot of NAV erosion, and it can really mess your portfolio up if you're trying to grow your wealth and not just your income. Now, for income-oriented investors who just focus on income products only and don't really care about NAV so much, I don't think this changes anything. It all depends on what type of investor you are. If you got any questions about reverse splits, put them in the comments below. I'll be answering every single one of them. And also, if you haven't watched this video on how I pick high yield ETFs, it'll be right in front of you right now. Thank you guys. See you in the next one.